Hey there, and welcome to Undoing We, Divorce and Life Conversations on WGSN-DB, Going Solo Network, radio, podcast, and TV. I'm your host, Mardi Winder-Adams. I'm a divorce coach, a mediator, and someone who's been through exactly what you're going through. This show is all about helping you get through the tough stuff, the overwhelm of divorce, the what now moments, and the messiness of trying to rebuild your life. We're going to talk about real life challenges, share expert advice, and give you practical tools you can use to move forward with your life. Are you ready to start shifting from we to me? Grab a coffee, sit back, and let's get started. I am so glad that you are here joining me today because we're going to talk about something that I've heard a lot about. I've spoken to a lot of people about, but I'm still not completely crystal clear on this whole idea of what is a reverse mortgage and how can it help those people going through divorce. So first of all, I want to say that a reverse mortgage or a reverse loan is absolutely perfect, whether you're going through a divorce, whether you're celebrating years or decades of being in a relationship, or whether you are just in a new relationship when you're past, depending on the type of property you have, 55 or 62 years of age. So let me tell you what I don't want to do is just share all the information that I'm not quite sure about. I want to go right to an expert. So I want to share with you a clip of a conversation I had with a true professional in this area. So I want to introduce you to Laura Phillips. She is a specialized licensed reverse mortgage professional. She's on a mission to guide people through this process so that they feel confident about what they're doing and how they're going to be able to budget for their next years of life. Laura has over 25 years of experience in real estate lending, and she understands that this is not just your house, it's your home, and it's one of the most significant financial investments you're going to make in your life. She works with real estate professionals, consumers, and financial advisors to help them understand the whole idea of, is a reverse mortgage the right thing for the individual? And how does this whole home financing process work? Laura is here today, and we are going to talk about some of the big questions that people have, and also some of the decisions that you need to make to decide if a reverse mortgage is right for you. Laura's going to share not only the big picture ideas, but she's also going to share some details that maybe you were aware of or maybe you weren't, but that it's really important to have this information before you get into the process. So let's talk to Laura, get your take on the conversation, and then we're going to meet on the other side, and I'm just going to share some key points that I think are really important to keep in mind. First of all, thank you for doing that, because there is so many opinions about this. And quite often, you know that saying about opinions, I'm not going to say it because it's not very pleasant. But the thing is there are so many, so much misinformation. There's so many blogs that talk about, oh, this is just, a big scam and all that kind of stuff. So let's dissect those myths and let's get them out of the way. But let's start with talking about, if you wouldn't mind, what is a reverse mortgage? Just so we know we're all talking about the same thing here.
Absolutely, absolutely. Well, it's designed for people over 62 and up. It is a HUD product, so that's a government product, and it's under the FHA banner. So it is a government-regulated loan, and it is a loan. It's not something that gives your house away. It's literally a loan on the house. It's just very, very different. So what happened was when President Reagan started out, he started this product out. Gosh, when was he a president? A while ago. I was alive then, so I should probably write that date down. But he came out with it in the beginning, and it was designed to help a senior woman who had lost her husband stay in the home so that she could continue to raise her 5 children. From there, it became a full product, and with a lot of not thought into it. So some of the myths out there is that the government that takes your house away, it owns your house. And that's not true. The government doesn't own the house. You still are entitled. You're still 100% owner of that home. The government has a lien. HUD, FHA, has a lien against the house. That's no different than any of the other liens you've had on your home. It's just how the lien is treated. One of the other big things that I think was really a lot of negative press in the early days was that they only looked at the one spouse, putting this one spouse on the loan. Typically, it was the male. Think of the era and the time. Typically, it was the male. So the wife or the other spouse did not get on the loan. And when the first person died, the only one on the loan, the spouse, usually the wife, was literally on the street. So now we had widows on the street. And that's very bad press, by the way.
Yeah.
You just don't want that. And so, between those two things, that the government's going to take the house away from you, or I'm going to lose my house, or my spouse isn't going to be able to live in it, are probably the biggest two things I hear people tell me every time they meet me. And they say, oh, that was a bad thing. So lost the house. Yeah.
Yeah. So first of all, I did not know that this went back to Reagan's days, because I thought it was a relatively new product. So like within the last at least 10 years, because I really just started hearing about them in the last, we were talking about this before we got on the air. Really, that whole, when Tom Selleck was on all the commercials trying to sell it. And I said, I had told Laura when we were talking that a friend of mine had said, well, it can't be all that bad if Magnum PI is selling it. I remember her saying that to me. But so I like I said, this is kind of, I'm kind of surprised. It's throwing me a little off my game because I didn't do any research on this before we got on the call. So I think that is reassuring to know, number one, it's a government product. So, you're not at the same risk of just like some lender going bankrupt or something, because it's a U.S. government backed program. And also that that there's no transfer of ownership of the home. I think that's the other one that's I think a big concern for a lot of people.
It's a huge concern, and like I said, they're always somebody from the church, my friend, a friend of a friend. I mean, the stories are out there, and really there are a lot of myths. There are more, but those are the two big ones, to be very honest with you. So how does a reverse mortgage work? Because that's probably the next question.
That was exactly what was coming out of my mouth.
Great segue. So a reverse mortgage, what happens is, in a regular mortgage, we'll talk about that first. In a regular mortgage, you wrote a check or did a deposit to your mortgage company every month to pay to own the home. And so you could say, congratulations, I own the doorknob this month. You were sending checks in every month. Well, the idea behind the reverse mortgage was to take seniors and allow them to live comfortably in their homes for as long as they were able to live in their home. So instead of making a payment on the house, the lender sends money to you in the form of an annuity. That's one of the ways you can get cash back out, or you can get a lump sum. So it's a vehicle, it's a lending vehicle that allows you, the senior, to be able to tap into the wall of the house and get some of your equity out. Most seniors are on reduced incomes because we're not working as much to have more income come in. And so it's hard to qualify for a loan. So it's very, very difficult to get a loan and get your equity out. And this is a way that allows you to get your equity out and does not require you to make a mortgage payment. So it's the only loan I know of in the world that does not require a loan payment. And you can if you want to, but it's not needed.
That sounds really interesting. So I'm going to ask a question, and if this isn't comfortable to answer, just don't answer it. But what's the difference between like a HELOC and a home equity line of credit or a reverse mortgage? What's the difference or the pros and cons to those?
Absolutely. And that's an excellent question because I get that all the time also. So a HELOC, a home equity line of credit, can be offered through a mortgage company, but traditionally comes from your banks or your savings and loans. And it's a second line of credit on the house, and usually has a term of interest only for, 10 years or so, plus or minus on that. And the next 20 years, total term of 30, you start paying it back. the balance that's owed back. So during that 10 years, you can take it out, put it back in, whatever. It's the money's yours to use. So a home equity, the HELOC, they should really change the two initials, by the way, because even I get confused. So a reverse mortgage, or a HECM, HECM, which stands for Home Equity Conversion Mortgage, it does the same thing. Again, it again can give you the money that you're tapping out of the house to you, either in a line of credit or as an annuity being paid monthly, or a combination, whatever works in your life. But you don't have to make those payments back. And there's a sweet spot to that line of credit. If you don't use all of it, next year it grows in the balance so that you have a little bit more every year. And it grows at the interest rate that you have against the loan on the lien on the house. So they work as two separate pots, but they both use relatively the same interest rate. So that line of credit can grow nicely if you don't need to use it right away.
Oh, okay, great. So it's really an alternative option to a HELOC, because I know HELOCs aren't always user friendly, and people can get really tripped up in that not needing to pay, and then all of a sudden it's like, oh my gosh, like there's a lot to pay back quickly. So
Absolutely.
Now, how does so you said that the reverse mortgage could come in the form of an annuity? Is that what I heard you say?
A monthly payment, similar to like what we get from Social Security. I mean, Social Security is a form of an annuity. It gives you X amount. So it's the same type of situation. It can give you a monthly income if you feel like you need a little bit of extra income coming in to feel more comfortable about situations in your life. Or it could be a combination of that and a lump, a line of credit that just sits there. Or you can take a line of credit and just use all of it, well, or most of it. You don't get to use it all the first year. But those are little guidelines to just kind of make it safe for you as a senior. The government came in and looked at why there were so many foreclosures. They didn't like that. They don't want to own your home. They're not interested in being real estate people. They're interested in being money lenders, the people that lend the money. So they just said, what's going on? And what they realized in the early days was if you gave somebody $300,000, that maybe not the best decisions were always made at getting that lump sum. And so this way, as it stands right now, and these changes came out, I don't actually know the year those came out. Those changes came out saying that you could have 60% of what you were totally allowed the first year, and the second year you would get all of it. So it was just a way of kind of helping the person it's like winning the lottery, getting a lot of money in at one time,
right,
using it smartly.
Right. So now does that impact like for tax purposes? Do you have to pay taxes on that money that you're getting as that monthly payment from the reverse loan?
Well, I'm not a tax person, so I'm going to say,
right.
I'll stay in my lane.
This is absolutely not. Nobody's providing any, I should have said this up front. Nobody's providing any financial information, advice. There's no client professional relationship formed here. And please do your own research before making any financial decisions. I should have said that right up front. Thanks for reminding me.
Thanks for that disclosure. I appreciate it. What I know is if you get a home equity line of credit, the second from the bank, I believe it is not taxed.
Right.
So you could confirm that with your tax associate.
Yes.
Absolutely. So the same with the reverse mortgage. Now, is there a tax on it? Absolutely. At the time of the sale, the house is going to have a value and the mortgage loan is going to have increased because you're not paying. So that interest has got to go somewhere. Builds up behind. Each month it gets a little bit bigger.
Sure.
That piece is taxed. So the sale of the home, the paying off of what's left on it, and that piece is a taxable situation.
Sure, as it would be if you sold any piece of property. Yeah, absolutely. So that was going to be my next question: is if you have, let's say, if you pass away, if you are the person that owns has the reverse mortgage and it's being paid, if I've got it, it's being paid to me and I pass away. Right. What happens at that point? Let's say I left the home to, somebody else or my dogs or whoever. What happens at that point?
Well, it's still in your estate. Remember, you're entitled. You're in ownership of it. So it just goes into your estate. So there's two things that can happen. If the house has value in it still, and the mortgage loan is less than the value of the home, then your estate, your heirs, whoever you've left it to, can do one of two things. They can sell it and recoup the difference in money, or they can purchase it if they want that home. And it's a complicated system, and it's actually done more in the servicing side than on the getting the loan side.
Sure.
But I understand it to be about 95% of the loan amount. So you could leave that to heirs, and they could have an opportunity to purchase it if they wanted to. They would have to go out and get their own loan to do that, but it is a possibility.
Right. Wow. So this doesn't really sound like there's a whole lot of downsides to this.
Everybody that ever's talked to me says that. So yes, I think there is. I look at it this way. It's a planning process. I'm not a financial planner, but I really work very hard, and there's no category for us. The loan officer, what does that mean? I sell loans, but I do more than that. And I've always done that. Well, I'm going to look at your finances. I'm going to ask you, have you thought about what long-term health care is? Are you planning on staying in the house? Do you want to give the house to the children? All of these are questions that hopefully any reverse mortgage lender would talk to you about. In that process, I would look at and say, okay, well, here are the options if you want to take the maximum amount out and you don't have any heirs. But if you want to leave the house to the kids or the grandkids, we should look at these products. They're not going to allow you to have as much. So again, I'm not a financial planner, but I have that scope of looking at your funds that way.
Right. Yeah. And I think this is important because there is a growing need, or a growing desire, maybe is even better, for seniors to, what do they call it, age in their home or age in place, whatever the term is. That, there's a lot of mental health benefits to that. There are some concerns about kind of warehousing seniors in large facilities. There's a detriment to that. As I'm starting to push my age up there, I'm thinking, I don't want to be living with a bunch of old farts. I want to be in my own home, being able to do my own thing. And I think that's really important for people. Yeah.
Well, you can use that money with a reverse mortgage that you do. I mean, none of our houses are really designed. I mean, I live in a tri-level. I'll just show you my own example. I live in a tri-level. My brother-in-law lives with us, and he has Parkinson's. So, of course, stairs are not the world's greatest thing for somebody with Parkinson's. And at some point, we either have to modify the house to accommodate the stairs for him, or go buy a ranch somewhere. Right? I mean, that's really the realities. So if you're living in a house, and it can pretty much work with you if you do the modifications, you can use that reverse mortgage to do the modifications. You can also use the reverse mortgage to bring in care if you want to bring in people to help care for you.
Sure.
Several loans I've done that way, where he wanted to age out. He was 92 years old, but he wanted to age out, and he had already used up pretty much all of his assets that he had. And I worked with him and his son to make sure that we could get a reverse mortgage that worked for him. He didn't expect to live to be 150. So we were looking at trying to maximize to be able to pay for the care that was there.
Right. Yeah. And so now I just want to make sure that I'm understanding this. You have to be a senior. And what's the senior definition for the purposes of a reverse mortgage? Like, what's the magic number?
The magic number is 62 for the government loan and 55 for people who own homes that are over $1 million. So I have what we call a jumbo, or a proprietary loan for those higher priced homes. There is a product out there for them also, and that's 55. You take a class. It's not like it's kind of a pass and fail, but I'm not going to get scared of, because I'm going to provide you with a book that's going to help you answer every question that they could throw at you, and also is going to help you feel much more comfortable about working with a reverse mortgage. So you take the class, we get done with it, we start the loan process, we get an appraisal, we're done in 6 weeks.
Wow.
Start to finish.
Wow.
Pretty quick.
And Laura, can I just, because I'm trying to, this is, like I said, you're such an expert. I want to make sure I ask every question I have about this, or every question I've ever had asked to me about it. Do you, which I don't know, I just tell people I don't know anything. Let me Now I've got Laura. Now I'm going to say, hey, here's Laura's information. Go talk to her. What you can only take out this reverse mortgage on the equity in the home or on the value of the home.
Well, the equity is kind of the value of the home less loan. So if the house is free and clear, then you have all the equity to you. When President Trump was in his first office term, he lowered how much we were allowed to take out. So we went from 75% to 60%. So if you're in your 90s, you can have about 60-ish% of the value of your home, less any payments that are due. So first or second, any of those things. Somebody at 70 can probably get about 45% of their value of their home. So it is tapped to that, and it's designed so that the house will ultimately try not to go upside down. In other words, the loan balance is going to be too high. Now, I should say, as a disclaimer on my end, that if you are 70-ish and you take out a reverse mortgage and you live until your mid-90s, your house might be upside down. It's just nature of even the appreciation of the home versus the loan going up. Those are some precautions, and I make sure everyone is talked to about that situation.
I told you there was going to be a lot of information. Laura is a really experienced professional, and she has answered all of these questions a gazillion times. So she really knows her stuff. I do want to just mention, as I do with all of these financial or legal episodes, I want to just let you know that I'm in no way endorsing or telling anybody, nor are my guest experts telling anybody that they should or shouldn't do specific financial or legal things around their divorce. This is for education and information purposes only. And really, it is important for you to do your due diligence and make sure that anything you're considering truly is going to be in your best interest, not only immediately, but in your future. So with all of that being said, I want to take a look at three really important factors that Laura brought up that I think it's just really important to sort of summarize these and capture them again. The first thing is that these reverse mortgages are not a scam. They're secure government-regulated loans, just like an FHA or a HUD loan or mortgage that you may have got when you first purchased your home. There's no way during the reverse mortgage process that in any way, shape, or form, the government takes ownership of your home or takes the title of your home or has any say in what you do with the money or with what you do with your home. So the home ownership is always 100% yours. This mortgage is just a lien against your property, which is what every mortgage is. So for me, that was really supportive and really powerful to just get that clarified, because when these loans first came out, there was a lot of misinformation about what was going on. And the program has changed. As Laura explained to us, there have been changes in the program from when it was first developed by Ronald Reagan when he was president. So the second point I think that's really important is that this does provide a financial income for seniors without any need to pay things back. So depending on the type of home that you have, if you have that a jumbo loan or that proprietary option with a very expensive home, in the millions of dollars, you may be able to qualify at 55 plus. If you have a traditional kind of federal loan and a lower, a modest valued home, you're probably looking at 62 before you would be eligible for this program. And what you're doing is you're dipping into the home's equity. So it's sort of paid off like an annuity. So you get a monthly payment, or you can use it as, you can just bank it and keep it. You don't have to spend that money. And unlike a HELOC or a home equity line of credit, you do not have to pay this back. So that's the difference between a HELOC, which is a home equity line of credit, which also pulls out from the equity of in your home, but you do become responsible for making repayments to your HELOC over time. You won't do that on a reversed mortgage, which for somebody on a fixed income, this can be a wonderful way to finance home renovations, to make modifications to the home if they have special needs, or they need wheelchair access, or they need, whatever kind of renovations, or they just need general maintenance and upkeep. Just be aware that you can use this money however you want to use this money. It is yours. And then the third point that I thought was really important is that if you have a reverse mortgage and you pass away, or your spouse passes away, if the reverse mortgage is in their name, the home stays as part of the estate. So in other words, it's not like the government swoops in, takes the title, and off they go with it. So that means beneficiaries or heirs can either sell the property and keep the remaining equity. There is obviously a repayment that comes in, but that still could leave depending on how much you borrowed and how much was used. Or they can buy the property themselves. And that can be a real option for you to consider, because let's face it, not a lot of times, or not a lot of situations I see where the heirs to the estate want to necessarily move back into the family home. Especially if they're older, if they've got their own home, if they're comfortably settled, they may not want to move to another community, or they may not want to pull kids out of schools, or, there's a lot of reasons why adult kids may not want to move back to their original home. So just keep in mind all of these things when you're thinking through this. And if you want more information, Laura's information is in the show notes, and you are more than welcome to take a look at her website or give her a call and speak with her. I hope this has been helpful. Thanks for sharing your time with me on Undoing We. If this episode resonated with you, be sure to share it with a friend, and don't forget to hit subscribe so you don't miss the next one. If you're looking for some more support, be sure to grab my guide, 5 Strategies for Better Communication During Divorce and Other Life Transitions. The link is going to be in the show notes. And remember, no matter what you do today, do something special for yourself.